This is Mastering Your Wealth with David Gagnon, the podcast.
David, my friend, welcome. How you doing, buddy?
Hey, Jessica. Good morning. How you doing today?
I am doing amazing. Glad to be back here with you. I tell you what, there's no shortage of talking points today.
It makes our job easy because we don't have to make up things. There's so much out there.
Yes. I'm anxious to know, what are folks calling about here in the office?
Well, people are sensitive towards their tax bill. So tax planning is something I get into in great detail with many folks. I mean, that's my background. I love to find ways to save taxes for folks. It's one of the biggest erosion factors on money. And if you're not looking into the future with how you're saving your money today and how it's going to get taxed later in retirement, you might be paying way more than your fair share of taxes because you didn't put together a forward-looking tax strategy to mitigate those future taxes. And I don't care where tax rates are going. If we have tax cuts, that's great. You'll still pay less in taxes if you take advantage of a good tax strategy. If they go higher, then your decisions today benefit you even more and just put more income in your plan.
Exactly. Yeah, having that tax plan is crucial, guys. If you don't have a tax plan in place, it can essentially make or break you. And because you brought up taxes here, it is no secret, of course, Donald Trump begins his second administration on Monday the 20th. And, he's been promising to extend those so-called Trump tax cuts before they expire at the end of this year. I saw some interview, he said, in his first 100 days, that's one of the things he wants to get done. He wants that signed, sealed, and delivered. Of course, he wants to roll that out, and he's got some other tax ideas here, one being one big, beautiful bill. But one thing that could stand in his way is the cost. Here's Liz Pangotti with the Roosevelt Institute on CNBC.
I think we have a really fragile economy, one that looks okay on paper, but the minute you lift up the hood, it's not great. Trump has proposed $10 trillion in tax changes on the campaign trail between making the Tax Cuts and Jobs Act permanent and, no tax on tips, no tax on Social Security, no tax on overtime. $10 trillion is not something you can recover from a debt and deficit standpoint and from an inflationary perspective.
So again, Trump has been, we saw it on the campaign trail. We've seen it as he gets closer here to take the White House. Lots of promises, lots of ideas, taxes on tips, etc. It looks like really the real debate has just begun. David, in the meantime, what can we do to take advantage of today's low tax rates so that we can avoid higher taxes in retirement?
Here's the thing about when you talk about tax cuts. It could be doable, but you also have to look at the other side of your spending. And they're looking at big drops in spending with the DOGE program. And these tax cuts could be achievable, but you have to have spending cuts too, because if you're going to keep spending at the same level that you're accustomed to, these tax cuts are going to be pretty tough to make. So it's all in the numbers, and you got to balance it out and have the right approach to what changes you make. This could affect benefits too. If you have spending cuts, it could affect things that people thought they were going to get at a higher level, whether it's Social Security or Medicare or their pensions. So it's a big, complicated task. But I think there's some good minds at the table, and who knows? We'll see what happens. When it comes to tax planning, it really involves looking at your present path that you're following with your money, how you're investing, where you're putting the money, and how it's going to get taxed later. And when we do the complimentary forecast analysis we offer our radio listeners, we're able to look into the future with what people are currently doing. And then from the details of that analysis, we can determine, will you pay more than your fair share in taxes because you have too much in tax-deferred retirement accounts and too little in the tax-free bucket. And so what we try to do is give the clarity, what people are doing, show them what problems that lie ahead, and then what solutions and financial strategies that are personalized that could put them in a better place to be more efficient, take less risk, and have better predictability. A lot of people speculate on how they should invest their money and where they should put it. And, a few years back, I remember this gentleman, he went through one of our educational retirement planning workshops. And when he came in for us to do that initial high-level review, I saw in his tax return that he had a capital loss carryover of $1 million, just over $1 million. And when he came in, I asked him, I said, where'd you lose all this money? He said, well, I was listening to a gold channel, somebody who was promoting gold investing. He said, I put my 401k plan in there. It was a I think it was $1.2 million account. it wasn't his 401k. It was a taxable brokerage account. That's where it was. It was a taxable brokerage account. And so what happened was he lost $1 million on that gold investment following a gold picking investing guide of some sort. And this was a few years before he retired. Now, this is I would say this was probably about 10 years ago. This is a while back. But this is the one that sticks out in my mind where people kind of go after the home run with some investment advice. And usually you'll fall on your face most of the time financially. And that changed his retirement. He was a pharmacist making good money. When he retired, he only had a couple $100,000 left, and he was living off the equity of his home to pay for his retirement needs.
Wow.
Yeah. And so, you really want to go through a methodical planning approach that's personalized, because when we do this, we can see what you're going to need to create in the area of benefits, what rate of return you're going to need. We can identify what targets that you're going to have to achieve as far as how much do you need to save monthly, annually, the rate of return that's going to be needed before and after retirement. All this has to be adjusted for inflation and taxes. There's a lot of moving parts to this, and people do not have to take risk at the level they think they need to take to get the returns they need, because here's probably one of the most important things to understand when you're building wealth and you want to invest in the market. You want to find a plan that's balanced out, where it's consistently earning some rate of return with very low volatility, because the slow and steady typically wins that financial race in the long term. And stop hitting trying to hit those financial home runs with the hot stock pick of the day, because when you get beat up, only takes one time for you to get in such a hole. It will take many years to try to recover and really put you off the track of what you could have achieved in your retirement as far as your spending level might be.
Because you mentioned the market here, listen, the market's been doing well. It's been doing gangbusters. A lot of people riding this wave for as long as they can. Again, I go back to President-elect Trump saying the market's going to be the biggest and best it's ever been. So I know a lot of folks out there have their blinders on, and they're not thinking about when the other shoe drops. It's important to know what goes up must come down. It's also important to know you can't time the market, right? You might as well think you have a magic 8-ball and you can see in the future. So how can we dabble in the market, but also give ourselves that growth and protection so that when the fire gets too hot, we're protected?
Well, you have to really take a look at truly diversifying your investment plan with so many different asset classes. And a lot of people that we see are invested in a bucket of mutual funds, usually stock funds and bond funds, but there's so much to the investment world as far as opportunities to really broadly diversify the portfolio way beyond that. And what we do in our firm is we're using institutionalized, proactive, tactical money management platforms that gives us the ability to customize a portfolio, to build in and bake into the investment plan first the right investment strategies and the right tools to align with somebody's plan that we have designed. But what we try to do is put some airbags on the money. So what that really will do for you is still position you to reap the benefits of a positive market, but soften the blow when the market goes into a negative position. And these airbags come in the form of hedging strategies. These are the types of things the wealthy people have access to because they're working with the firms that require a big investment deposit for them to have access to this. But our clients don't have to be the ultra wealthy to get access to these tools. Mm-hmm. And there's things that we use that have downside buffers. So you could be what's called buffered on the first 10% drop in the market and still protect that floor, or even lower, but still have upside gains that are captured when the market's positive. And the different product types that are out there that can also complement a growth-oriented portfolio and still reduce risk even further. And we use a lot of things in the fixed income arena that are different than the bond funds that provide very stable and low-risk yields that are almost 3 to 4 times higher than the bond. So, there's so many things that we personalize for a couple when they come in or an individual, but there's so many plans that we've done in the last year that I can look back on where people were struggling and trying to decide, first of all, if they could retire financially. And when we did their analysis, we were able to show them how to really find the track and a plan to implement. And a lot of people, when they retire, they want to turn on their Social Security, and it doesn't matter what age. It could be 62 or all the way to 70, but a lot of times they make a very costly mistake, so we work through those details. But when we put together a plan for a couple, about 4 months ago, they had been retired for a few years, and they were depleting their principal because when they went into retirement, they were still using their growth stocks as their source to generate an income. And what had happened was they had lost a significant value of that portfolio back in 2022 when the markets went down, along with their bond funds. And so they were down over 30%, and they were still needing to draw that income. And so they were in a very vulnerable position at that point, and that's when they panicked and they reached out and they wanted to see what, and they were not that old. They were in their late 60s. So they kind of panicked, and then they realized they better get some help. So they gave us a call. We did a plan design, and what we did was we aligned their investments that they had with an income plan strategy we put together. And what we were able to do is increase the yield on their money and not be in the market where they're seeing their value of their account going up and down. And when it was at a time when the market was down, they had to sell off more shares to generate their cash. And that really was kind of killing the goose that was laying the golden egg over time. So what we were able to do is kind of build a strategic income plan that we use different tools, able to use higher income yielding income investments that paid monthly, and that still left a good sum of their portfolio to position it for long-term growth needs for offsetting inflation. But the long and short of it was now they had a plan to follow. They were happy about it. They felt more comfortable. They felt like they had better control, and the probability of succeeding is not running out of money.
There was a new report from the U.S. Surgeon General that says alcoholic drinks should carry warning labels about cancer risk. It found that alcohol is the third leading cause of cancer, obviously behind tobacco and obesity there. The recommendation has garnered serious attention, obviously considering the source here. And, it got me thinking about considering the source, who to trust. And we're supposed to trust the words of a financial advisor, somebody like you, David. But what are some of the signs that maybe you hired the wrong one? Because let's be honest, there's some scammers out there.
Yeah, I mean, in our industry, everybody kind of uses the term and labels themselves as a financial advisor, but you really have to get better clarity as to what is behind that for that particular person you might be interviewing to work with. And there are folks that are purely licensed only to sell investment products in the securities business, or there are folks that are only licensed on the insurance side of the industry and can only sell you insurance products. But here's the thing. If you're looking for real planning, you have to have somebody that can look at the big picture. And there's a lot of complexity in the world of money, in the world of tax, in the world of investments. And you really want to really find somebody that can do a comprehensive analysis and then help you make decisions based off analysis and data and align that with what you really want to accomplish personally in your goals and objectives. And, let's talk about some of these moving parts that somebody needs to evaluate to bring it all together. Because if you're doing a great job with your investment plan, right, you have an investment advisor, but they can't help you in optimizing your decisions on when you should take your Social Security and what strategy you should use, they're costing you money because they're not helping you in that area. It's not their fault. That's just not how they're wired in the business. They're there to manage your investments. Same thing with an insurance agent. And so what we really want to get people to understand is if you want to make great decisions in all the areas that can optimize and build efficiency with your financial resources, you have to make good decisions on how do you optimize your Social Security. If you have a pension, that's a different strategy that has to be optimized and maximized because there's different ways to take advantage of your pension choices. Your income distribution plan when you retire, probably the most important component of a successful retirement plan, and it's got to be strategically aligned with you personally and what you need to spend. Your tax strategy. Coming from a tax background and being licensed to provide tax advice, that is a huge advantage if you can find somebody that can put you into a plan that's going to lower and greatly reduce your taxes in the future, not defer it. Your investment strategy should be aligned with your objectives and needs and tolerance for risk. And then your estate plan, and then your out-of-pocket health care plan. This is something that we work on cohesively and comprehensively for our clients. And if you're listening and you're not getting answers in these other components of your financial world, there's something that's suffering and don't even see it. It's in your blind spot. It's costing you money. And so these are what I refer to as your wealth transfers that occur unknowingly, unnecessarily. And if there's a lot of those going on, you're going to have to take a lot of risk in your investments to overcompensate for these expenses and these wealth transfers that you don't see. So when somebody's shopping around for an advisor, maybe they just want to invest a CD that matured, and that's all they want. They want to get a safe return someplace. Then maybe you talk to an insurance agent, and they'll sell you a fixed or indexed annuity. But if you really want to get a plan and have clarity as to what you need to do today and every decision going forward and work off of a plan, we validate our advice to our folks when we put together their plan. When I see the details of their analysis, then I know how their money should be invested to lower their risk, increase their yield or income that they are going to need to achieve their income targets, how to build in a plan that's got buffers for market losses and also hedging against out-of-pocket health care with some strategies that are built into your plan. Have an income you can't outlive, very low risk, very tax efficient, and then make sure we have an estate plan that's integrated with your financial plan. And so this gives people a lot of relief when they see this plan completed and they've been educated along the way, and we can show them in their numbers when they make their decisions what problems we address that we could identify in the details of the analysis and what solutions we're providing to make it all work in a better way with a higher probability of success.
And I think really that's what everyone's looking for, is to have that confident retirement, right? To have all their ducks in a row. And also something important, folks, I always say this, everybody's situation is different. So you're going to have that custom plan when you sit down with David one-on-one. So I know it can be overwhelming and daunting and stressful and all these things when it comes to talking about your personal finances, not to mention this is your literal life savings for the rest of your life. How do you make sure you plan that efficiently? And David, for those that are thinking, all right, let me sit down with David. I've been listening to the show. He's got over 30 years of experience. He's obviously somebody that has had a great impact in our community. You've been here for a very long time, helping lots of people retire, make this decision. What is that first meeting with you like?
Well, I'd like to have a phone conversation, or if somebody wants to come to the office, because what's great about that is it gives me a chance to kind of get a sense as to what people are concerned about, what their experience has been in the past, what have they done that they liked, what have they done that they haven't liked, and where do they want to go from here as far as their planning goes. And when do you want to retire? What are your dreams in retirement? What do you want to accomplish? Because all your dreams, there's a price tag to it. And then what we'll do is we'll have our paraplanner Frank send an email with the instructions on how to get into our planning portal to give us the information we need to compile that comprehensive forecast outlook with what you're presently doing. And when we get to that point, now we can see what lies ahead. Are you going to meet your retirement goals adjusted for inflation and taxes? Are we going to need to kind of plan out and model certain things that you have as far as on your bucket list? So if you want to take a vacation for the next 10 years and budget 10 grand or 5 grand or whatever the number is, let's see if it's going to work. And if it's not going to work financially, then we have to put our mind to the equation here and put together some solutions and strategies to make it happen. And it comes with planning, because if you're not seeing this in a plan and making your decisions off of a plan, then you're going to derail your plan at some point in the future, possibly. And at a point in time, you can't fix it, right? So, having that conversation and letting the folks find out who we are, how we work with folks, how we onboard you, and what we do going forward. Because when we put together a plan and you become a client, we keep revisiting that initial structure of the plan from year to year and keep tweaking it and keep modifying it and make sure you stay on track, because so many things will change in your life. We have tax laws changing. We have the investment world, your spending needs, your health, which costs money at some point. Family dynamics come up and surprises come up where you might have to help a grandchild or a child. So we want to be able to make sure we can help you pivot at a time of unexpected events, and make sure your plan is stress tested so that you can absorb that without any big surprises or high level of anxiety to try to overcompensate for that. So get to know you type meeting first. It gives me some background on what they've done and where they need to go.
For more details or to sit down with David for your complimentary financial GPS, visit masteringyourwealthradio.com. David Gagnon is an investment advisor representative of Retirement Wealth Advisors, LLC, an SEC-registered investment advisor. First Financial Planners, Retirement Wealth Advisors, and WICC are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered financial advice or a recommendation to buy or sell any financial vehicle. Individuals should consult with a professional specializing in the fields of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Past performance is not a guarantee of future result. Investments will fluctuate and when redeemed may be worth more or less than when originally invested.